Hello and welcome back. In our last video, we discussed how Mark Dankman and his team can save you $53,272 or more when buying and financing your home. And it's guaranteed. But before you take that next step, you have to ask yourself, are all lenders really the same? There comes a point in every person's life where you have to decide. Now, we discussed in the last video what every lender and realtor can do to help you. They can help you buy a home, get a loan, and pay it off in, say, 30 years. My goal is to act like a banker, though, not a borrower. See, a borrower focuses on percentages, whereas a banker focuses on money. I've heard it said time and time again that those who understand interest earn it. Those who don't understand are destined to pay it. It's that simple. And again, I have to point this out. Which sign would you rather have in your front yard? The red sign on the left that says, I had a 5.5% rate and paid $400,000 in interest? Or the blue sign on the right that says, I had a 1.275% effective rate and paid only $125,000 in interest? This is brain dead simple. However, you have to also think in terms of banking and understand, here's what the bankers know before you ever walk in the door. And it doesn't matter if it's Bank of America, Capital One Bank, Chase, Citibank, Wells Fargo, or any of the other large national chains. They know three basic things before you ever come in to fill out your application. They know that we as people refinance every 5.1 years. This is a national average. They know that we sell every 7.4 years. Again, a national average. And they also know that less than 10% of U.S. homes are ever paid off. These are staggering results. But consider these facts. The total cost of buying and financing your home based on a 30-year loan at 5.5% interest, not including taxes and not including your property insurance. If you've got a $100,000 home, your total cost could easily be $204,403 or more. If your home costs $150,000, your total cost could be $306,602 or more. If you've got a $200,000 home, your total cost could easily be $408,807 or more. If you have a $250,000 home, your total cost could be $511,006 or more. If you have a $300,000 home, your total cost could be $613,210 or more. If you have a $400,000 home, your total cost could be $817,614. And if you have a $500,000 home, then your total cost could be a staggering $1,022,017 or more. That's at least twice what you expected to pay. Isn't it fair to say stop focusing on interest rates and pay attention to interest paid? But wait, it gets worse. If you refinance your mortgage in 5 years, assuming an initial $100,000 loan, rate and term refi, and a new rate at 4.75%, while it looks like it's going down, let's consider your initial loan amount of $100,000. Your payment, when you consider payment and interest, $567.79 a month. Your balance after 5 years, $92,461. That means that you've paid off $7,539 in that 5 years. Closing costs on the new refinancing loan, another $3,000. New loan balance, $95,461. That's assuming that they roll the closing costs into the new loan. Your new payment, $497.97. Monthly savings, $69.82. How many months before you break even? Think about that $30,000 refinance alone adding an extra $69.82 every month, it's going to take you 42.97 months just to break even on the refinancing amount, correct? Wrong. 433.03 months. That is 35.25 years. You made $34,607 in payments over the past 5 years, right? Who has the $34,607? You or your bank? The bank, of course. This is what you're doing. You might as well be sitting here in a hamster wheel like this guy, just going in circles. Has your lender, your realtor, CPA, or financial advisor ever shared these facts with you? If not, why? Let's look at different options. Purchase and finance a $100,000 home at 5.5% rate. And again, as I mentioned in the last video, this is for illustration purposes only. But you start out with a monthly payment of $567.79 plus $230 TIMI. Home paid off in 6 years. Other debt paid off, 10 months. Interest and savings, $84,847.88. Effective interest rate, 1.215%. Payment invested for the remaining 24 years at 5% that you've saved or could spend somewhere else, $426,984.25. Accomplished with the same amount of money other realtors and lenders would have you spend. Or you could consider the Real Estate Squared 30-year plan, where you could pay off 4 of these same types of homes in the same 30 years. And at the end of that 30-year period, again, you have a $0 monthly payment, 3 rental homes, and a monthly rental income of an average of $4,500 per month. Again, that's estimated, but if you've got a decent home, it's very reasonable. You have to ask yourself, how do we accomplish all of this? Consider this fact: an extra $30 per month added to your $100,000 mortgage at 5.5% will eliminate 41 mortgage payments. How you do this is simple. All you need is our 5-step cash flow and debt elimination plan. We call this the My Equity Blueprint. In step 1, we go over cash flow and debt analysis, analyzing your cash flow and your debt. In step 2, we focus more on the cash flow repositioning, things like groceries, going out to restaurants, home insurance, medical expenses, taxes, credit card bills, vacations, auto insurance, and even your cell phone bill. On average, we can save anywhere from $750 to $2,000 per month in expenses. In step 3, you receive access to money-saving information and discounts that help you save. In step 4, we go shopping and save money. In step 5, you get to enter your data into the My Equity Blueprint website so that you can start tracking your expenses. Here is the real-life client before MEB. Current cash flow, net monthly income, $3,432. Auto loan, $505 with a 4.3-year remaining payment. Debt payments, $110 a month with a $6,034 balance. Living expenses, $1,766. Rent, $975, which leaves this person with a disposable income of only $76 a month. Here's a real-life client after MEB. Current cash flow, net monthly income, $3,793. Auto loan, $505. Debt payment, $110. Living expenses, $827. New mortgage payment, $884. Disposable income, $1,467. Debt-free credit cards, 6 months. Debt-free car, 19 months. Debt-free mortgage, 6.58 years. 30-year cash accumulation, $1,051,751.14. So let's recap. Option number 1. You can buy a home, get a loan, and pay it off in 30 years. Option number 2. Buy a home, pay it off in 6 years, save $426,985. Option number 3. Buy 4 homes, pay them off, and start collecting rent. All with the same amount of money every other realtor and lender will have you spend every month. So now you can decide, does it make sense for us to work together? Let's get started today. All you have to do is fill out the form below and someone will call you, walking you through the entire process step by step. It really is that easy.